right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all, and happy Thursday to you. It's almost over. So close, so close. We're obviously going to do analysis of all the majors, but as we were discussing with Paul just a little while ago, I mean, we're seeing a really big move in bonds. This is going to have an effect on obviously all the the yen pairs. Is the yen pairs tend to be pretty sensitive to yield. So we got you can see here's the ZBs. This is the 30-year Treasury, and we're sitting on support here, and really key support at that. And we got to watch if bonds really start to break lower, because we're going to end up snapping basically a 2-year trend line. I mean, this is September of 2014. Okay, that's a 2-year trend line on the continuous contract. You got the 10-year, which is approaching some pretty key support. Fib confluence of a 38% retracement of the major this major move from the last couple of years. Also a 50% retracement, and that confluence of fibs it's been holding us, and we're at risk of breaking down. And if you don't think that can happen, then you have to take a real close look at bonds. Here's the bund. I mean, look at the bund breaking lower, or the boon breaking lower. Excuse me. You got boons breaking down. You got the 10-year and the 30-year sitting on really key support. I'm not 100% certain they're going to break today, but if they do, that's gonna throw a pretty big, I want to say, bout of volatility into the currency market. I look at the markets always as a set of dominoes, and when you take a big domino, which would be like the bond market, and it topples over, you got to think about what the repercussions are going to be across asset classes. Specifically in the currency market, we tend to talk about the yen, because the yen is the most sensitive to yields. I mean, if we get yields rallying, the dollar yen tends to have a very positive reaction to that type of move. Now, I'm going to go through all the major currencies, but I have to tell you before I do so that the yen pairs, which I'm going to cover just a couple of them as I'm going through this analysis, the yen pairs, they're really close. Not just the dollar yen. There's a lot of pairs like the Aussie yen, pound yen, euro yen. I'd have to look around to see other ones that are really within striking distance of breaking higher, meaning the yen breaking lower, almost across the board. So, I'm going to talk about those in a minute. What we have to do is we have to get through our major currencies, because we have, obviously, we have some data coming out today. We got durable goods orders, weekly unemployment claims, pending home sales, and so there are some potentially market moving events that are happening today. So let's get it on with our analysis, and we're going to start with the euro. So the euro has been very much in the 108.50 to 109.50 range, and I think this is if you go back to, and by the way, my charts didn't save yesterday. I'm a little upset about that, because you can see all my charts these are all the drawings from the last couple of days, so I'm gonna have to delete everything. But remember, over the last couple of days, we talked about a move in the dollar yen, and this is from 2 days ago. Okay, we talked about a move to 109.50 and a reversal. Well, we went to 109.46, and we came off there. So, hey, you have to admit that was pretty damn good. We were 4 pips away from really resistance. Now, I still believe that the euro dollar, okay, is in between this 108.50, 109.50 range. Do I, or am I comfortable shorting the euro dollar here at 109.50? I'm not 100% comfortable with that because look, if let's say the bond market starts to fall, even more aggressive than it has right now, so it starts to break lower. Dollar yen starts to rally. You look at currencies like the euro yen. Okay, here's the euro yen. We've got this downtrend line that comes through here, and it intersects right at the about the 618 retracement, which is 114.90 roughly. Okay, that's about 50 pips higher than where we're at right now. If the euro yen spikes up through here, through this resistance, and it clears this trend line, whoops, I didn't want to do that. If we spike up through this trend line, I'm not sure if we're gonna. I'm not sure if we're gonna stop anytime in the near future. So if we start seeing a squeeze in the euro yen, it's going to bleed over into the euro dollar to a certain extent. So this euro dollar that is stalling here at 109.50, we may end up pushing to the big figure 110, maybe even a little higher towards like 110.50. Because that's how big of an effect I think some of these yen pairs can have. So I don't know if I'm comfortable buying the dollar just yet. Now, obviously, I'll go over the dollar index a little bit later. The dollar index still looks like it can pull back some, which we'll talk about here in probably about the next 15 minutes. But anyway, there's the euro. Let's go over to the cable. Now, the cable, and just so you guys know, from yesterday, I sold my pound dollar, I sold my euro dollar. I made some good money shorting the dollar yesterday. But you can see the pound. Okay, I have to redraw everything, so let's remove that for a second. Okay, so we had this little false breakdown right here. That gave us that. We had that hammer on the 4-hour. Do you remember that hammer from a couple of days ago? We had the hammer on the 4-hour. It's yielded some upside move. We had preliminary GDP come out in the UK, stronger than expected. Pound, got faded pretty quick, but at the same time, I don't know if I'd necessarily want to short that thing just yet. If you take the, post-flash crash bounce to the high, to the low, 618 retracement, that's what's been capping us, and that still remains resistance. I really believe that if we break this, if we break 123.25, there's going to be a little bit bigger squeeze going on in the cable. It's to be seen if we're going to be able to break that or not, but personally, I'd like to see how we respond or react at that level. Now, as you guys know, I think the pound's bearish. And as long as we stay below 128, there's absolutely no reason to be on the long side, other than if you're counter trend trading. But to be in the direction of the trend, and it's as long as we remain below this 128, is bearish. Okay. That doesn't mean that we can't have a squeeze to 125, 126, 127 before rolling over either. And you can't rule that out, if you know what I'm saying. Okay, so support in the pound right now. This is a 4-hour chart, so support in the cable seems to be right around 122 at this point. This is supporting us pretty well. Okay, so intraday, while you're above 122, you got to be aware that we could continue to squeeze higher. So 122 is minor support today. And we are in a bearish trend. So remember, if you're playing the pound on the long side, you are playing counter trend. It's okay to play counter trend as long as you know you're playing counter trend. And when you're playing counter trend, you just try to trade smaller positions rather than bigger, more aggressive positions. You tend to be more aggressive in the direction of the trend, not counter trend. Okay, let's go over to the Swissy. So the Swissy, we had this little tweezer top the other day. Might have a little head and shoulder pattern developing here. Personally, I think that the dollar Swiss looks like we can come back down here to this breakout point. Now, look, I'm bullish the dollar Swiss while we're above this blue line. If you guys don't know why, and you're like, well, maybe this is like your first time listening in. Well, remember, we broke out of a year-long channel out of the dollar Swiss. This was like a multi-month, summer-long consolidation triangle. We broke out of it. We have this channel right here that we broke out of. That was a year-long channel. As long as we were out of that, I want to be bullish. I don't want to be bullish right here, right now. I think buying, the dollar Swiss down there makes a lot more sense. So, any dip really back down towards 98.30, maybe even 98 cents, I'm a buyer. Question is, are we going to get down there? And if we do get down there, can we hold it? And that's what I'll be looking at that point. If you ask me, hey Blake, are you going to short the dollar Swiss? That's not that's not my DNA right now. I do not like to trade on the long side of the Swiss franc because of the Swiss National Bank. They're too aggressive with their monetary policy for me to be long the dollar Swiss at any given time. So I'd rather be short the dollar Swiss. I'd just rather be short the dollar Swiss once it gets, or short the Swiss franc, excuse me. I'd rather be short the Swiss franc or long the dollar Swiss when it comes down here rather than where we're currently at. All right, now what does that mean currently for today? Well, that means this 99-cent level is going to be really important support, because if we do break down, you can call that a head and shoulder pattern if you want. I think it's a pretty ugly head and shoulder pattern, maybe a tweezer top, what have you. Should take us down towards this 98.50. All right, so I'm going to write down 99 cents again, as we did yesterday, or I think we did yesterday. And resistance is 99.60 right now, as we try to carve out this kind of funky looking head and shoulder pattern. All right, it is bullish, but just because it's bullish doesn't mean that I'm bullish today. Just because it's bullish right now doesn't mean I want to be a buyer today. I want to be a buyer down here. Might have to wait 1 or 2 days to get long down here, but overall the trend is breaking higher. We've managed to make higher highs and higher lows, which is definition of an uptrend. This is not the prettiest uptrend in the world. Okay. All right, let's go talk about the yen. So obviously I want to talk a little bit about the yen, and I have to stop here for a second because the dollar yen, I bought it last night. I did buy it last night at 104.57. All right, I am looking to add, especially if bonds continue to break down and yields push higher. I do think that the dollar yen, and this is from 2 days ago, so I do think the dollar yen can continue to squeeze higher. And if you look at this chart, let's put this over here. If you look at this chart, what we're dealing with right now is more of like a wedge. Okay, we're just kind of wedging into resistance. Now, you would expect that because yields are obviously rallying as well. Most sensitive pair that we have to yields would be, the dollar yen. But, you look at the dollar yen, if it breaks higher, and it really starts to make its move because bonds are selling off, and boons are obviously selling off as well. Question is, how big could this move be? And as you guys know, I've been looking for reasons to buy the dollar yen. I'm not even worried about risk appetite and risk aversion at this point. Hold on really quick. I need to block somebody. Done. Okay. All right. So I just had to do that really quick. So here we are, right up against resistance, and it looks like we're going to, quite possibly squeeze higher. Um, Now, if you look at all these other yen pairs, let's go over to like the Aussie yen. Okay, and I drew this yesterday, and then I didn't save my charts like a dumbass, so I have to do it again. All right, here's the Aussie yen. Now, this is a year and a half trend line in the Aussie yen. Now, check this out. Oops. Okay, so here's your 200-day moving average, right? Let's make this a little thicker. Okay. Now, here's your Aussie yen. Here's your 200-day moving average. Here's your trend line. So imagine if the dollar yen clears 105. If it ends up clearing 105, can we break higher from here? Okay. Yeah, we can. Let's go over to the pound yen. Here's the pound yen. The pound yen, we had this, nice bearish wedge that has failed to really play out to the downside. What happens if we squeeze back above the neckline? Okay. Let's go over to the euro yen. Oh, we already showed you the euro yen. Here's the euro yen. We're approaching a 2016 trend line. We're getting close to it right now. So you have to imagine if bonds end up breaking lower and yields rally, when you see some of these yen pairs have the potential to really squeeze here. Okay. So that is in my opinion, that's a big risk for the market at the moment. And that's why you have to pay attention to this dollar yen. So with the dollar yen, okay, we have the here, let's get rid of this because the pullbacks have been so minor. I mean, we haven't even been able to pull back a 38% retracement, by the way. That when you have a move that's not yielding any type of a pullback, that's in itself pretty damn bullish, right? Okay. Hold on. Nick Trey just she posted a bat on the 30 year, so I just retweeted it because if it's going to bounce, it's going to do it here. But we're talking about the implications if we do break down, because I think whenever you get so close to support or so close to resistance, you have to start assuming that there's going to be a break, not necessarily trading in an assumption. But you have to go, okay, well, what are the implications if we do break? This would be the same thing about the the bonds or the buns, okay, or boons rather. What happens in light of that? So the dollar yen, if we break higher, I gotta figure out where resistance is. I mean, because beyond the spike high, which is 104.87, so I'll just write down 104.90. Where can we go after that? Okay. So what you have to do is go this high to low, 105. Beyond that's 105.50. So, which is the 161% extension. So 105.50, I would say, is our next stop, since we're so close to 10. We're so close to the 127% extension. So really, it's 105.50 should be the next stop. Okay. Let's see here. We are in a range, but we're threatening to go bullish with the dollar yen. Now, support will be this trend line support. So it comes in at 104, 104.30. So while we're above 104.30, you got to, be on breakout watch to the upside. Okay. So we're threatening to turn bullish after today if we can sustain a breakout. Okay. But it hasn't turned bullish yet. Let's go over to the Canadian. Okay, I'm going to do the Canadian really quick. So here's the Canadian. The dollar Canadian, I mean, you know what's crazy about this thing is crude is so close to $49. And crude bounced from $49 after the inventories data yesterday. But there's been like no pullback, no bounce in crude. It bounced a buck and got slammed right back down. If crude breaks through $49, this thing is gone. It is breaking out, and to me, it looks like this dollar Canadian is just ready to break higher. And I'm not long. I don't have any. Well, you know what? I do have New Zealand Canadian exposure. I take that back. So I do have some Canadian exposure. I don't necessarily want to see a breakout just yet, but it can happen. I mean, if you look at how strong these Canadian pairs are, I mean, and how little pullback we're getting, it's pretty amazing. It's like kind of like the dollar yen. We're wedging here. So currently, I would say support is probably at 133.40. Resistance is at 134. I mean, it's wedging. I have a feeling a lot of people are standing in front of the dollar right now, expecting a pullback, especially after such a big run. We're in a range, but we're threatening to turn bullish here. If we break above 134, the dollar Canadian turns bullish. All right, I'll be back in a few minutes. When I come back, we're going to do the Kiwi, the Aussie, dollar index, peso, Swedish krona, Norwegian krona. Lot of analysis to do still before we have our news coming up. So don't go anywhere. I'll be right back. Back in just a few minutes. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. We've got to really finish up our analysis here. So let's go of all the majors. So let's start with the Kiwi. Let's get this going again. So the Kiwi dollar, I feel like such a bozo for not, we talked about the Kiwi rejecting the 71.80 yesterday, and what a great short it'd be up there, and we came within a few pips again, and then reversed. And I'm not short the Kiwi. In my opinion, the Kiwi is, looking like it wants to resume its downside again. So, okay, so just like yesterday, 71.80, 71.10, which is a spike low here. Those are the prices we need to pay attention to right now. This dollar yen just continues to creep higher. It does. All right, so I mean we're only a few pips away from breaking trend highs in the dollar yen. FYI, gotta keep an eye on it. Okay, so anyway, 71.10, 71.80. You know, if we get an opportunity to short it at 71.80 again, I would use that as an opportunity. We are still in a bearish trend. Okay, um, we're in a bearish trend while we're in this, you know, head and shoulder pattern. Still, I mean, it still looks like we'll push down towards channel support, which, as you guys know, is way down here. Okay. All right, let's go over to the Aussie. The Aussie is another one I really wussed out of yesterday. I knew that the failure at 77 cents was the place to be short. Yesterday, you know, after the CPI numbers came out 2 days ago or a day and a half ago, that failure above 77 cents, it was the time to be short, and I just didn't short it. And now, if you look at the Aussie dollar, though, we're really sitting on what I think is some pretty key support. Now, remember, we are still in the apex of this triangle. Big, for those of you that don't know, we've been monitoring this. You know, those of you that don't listen here every day, we've been monitoring this huge triangle for so long, and we're in the apex, and it's getting very choppy. Okay. You know, a lot of people are looking at this as an inverted head and shoulder pattern. I have a bit of a problem with it because I think that too many people are long the Aussie right now. And what's happening currently, which I think we have to pay very close attention to, is we're now threatening, you know, a break lower. So at this point, low to high here. Okay, let's redraw that. See, at this point, if you break through 75.85, that is going to be what I would interpret as an epic breakdown in the Aussie. Okay, 75.85, because remember, this is the 618 retracement, and it looks possible. So 75.85. is support, and it's major. 75.85, and I think most of the people that bought the Aussie dollar based on the inflation data, even though the inflation data was mostly fruits and vegetables due to weather, you know, people are probably going to get stuck on the wrong side of the Aussie dollar being long, and that's why I think at this point stops are, you know, at risk of being tripped. Right now, I'm trying to figure out where any near-term resistance is for the Aussie, because if the Aussie does, you know, bounce, you know, where could we be on the short side of the Aussie? Like, I'd rather be on the short side of the Aussie. I don't want to short it as it's falling. I'd rather short it on a rally. So it's trying to figure out where that point would be, and I think you know, yeah, like yeah, move up to 76.75. Oops. You know, a move up to 76.75 would be a really nice place to be on the short side. I just don't know if we're going to get an opportunity to sell it up there. That's you know, that's obviously the $1,000,000 question is, will we get that opportunity? I just kind of don't see it. But again, let's talk about and we are in a range until we break out of this triangle. Let's talk about the prospects of a dollar yen rally. Okay. A dollar yen rally, an Aussie yen breakout, euro yen breakout, pound yen breakout. If that all happens, we could actually see the Aussie dollar squeeze higher a little bit before rolling back over if all the yen pairs decide to move. So it's not out of the question. And like I said, I'd rather be on the short side of the Aussie up here than trying to short it on a breakdown. I just think that if we break through this 618, it's probably gonna cascade a little lower. Okay, let's go over to the dollar index. Now, the dollar index has been really strong. Yesterday, the pullback was very minor, on the dollar. And I was short the dollar yesterday. I was long the euro, long the pound, made some good money. But probably like you, I'm surprised the dollar is not pulling back further. I really, ultimately want to be long the dollar when we get down here to the breakout point. The question that I have right now, and I'm sure the question you guys are all wondering is, are we even going to make it down there? $98.20 is still support today. I'm hoping we can get a move down to $97.60, but $98.20 is still support for today. It's minor. This red line is minor support, and then resistance is, obviously $99.10, which was the spike high. It was actually a little higher than that, but we can write down $99.10 just to, round it out. The dollar is still very bullish, even though I don't feel like, I need to be long the dollar. Across the board right now, I can't ignore the fact that the dollar's still pretty damn bullish, right? Okay. Speaking of bullish, look at the US dollar Mexican peso. The US dollar Mexican peso was actually, we were trading a little stronger. We've broken out of this channel, this down channel. Now, we wrote down resistance yesterday of 1877. We went as high as 1881, and we've reversed from there. So this is, and here I'm going to delete this because remember, this is important. This is a zone now. This is the sell zone. So it's fine if you want to. It's fine if you want to be short the U.S. dollar Mexican peso up here. However, a break now of 1881, which is also that previous support, then you're going to get a pretty massive breakout. I think dips should be well supported to 1860. $1860 to 1881, and we're in a range. Okay, let's take a look at the U.S. dollar Swedish krona. So both the Riksbank and the Norges central bank had central bank meetings yesterday. Okay, and both the Riksbank and the Norges central bank kept rates unchanged. And the Riksbank really set expectations for possibly more easing in the future, which allowed the Swedish krona to weaken and the U.S. dollar Swedish krona to break out further into 52-week highs and major multi-year highs. The Norges central bank, on the other hand, they just kept rates unchanged, and it looks like they're going to stay unchanged for a while. So, the U.S. dollar Norwegian krona fell, and we wrote down yesterday, and I think we still need to monitor the 830 level, and now it's really 829, and we should have some. Oh shoot, I didn't want to do that. We should have some support down here at 820. Because remember 820. We'll be retesting this breakout point. Okay, so 820, 829. I know we had the 830 yesterday, but let's 820, 829. Okay, and we're just going to leave it like that. Okay, and we're still in the range. Now, the U.S. dollar, Swedish krona, because the Riksbank, like I said, they're very dovish, and this thing is extremely bullish. Remember, 905, if you guys don't remember, I have to redraw it again. 905 was the... Oh, we're almost at 161% extension here. 905, where do we come up with that number? I have to think about these previous drawings here. Oh, that's what it is. No, 895, where we're at right now, is the 88% retracement, right? I'm going to make the assumption that that 9 is our next resistance, and the thing's just bullish. And as we wrote down yesterday, while we're above 888, there's no reason to be bullish or bearish. Okay. And the U.S. dollar Swedish krona is very, very bullish at this point. Okay. All right. There's your bias chart, and now I have a little bit of time to answer some questions. So, boy, I'm going to need some coffee here.